I don't know, where do we even start? I mean, it was just 8, 9 months ago that the Fed was still talking about no rate hikes until 2023, and some saying nothing until 2024. And now there's this mad rush. I don't know, Elijah. It just drives me crazy. The media treats, and the investment community treats all these people at the Fed as if they walk on water, they're the masters of the universe, when clearly they're not. I mean, none of them have held jobs outside of the Fed. They're just these theoreticians and academics, and they're wrong all the time. And yet, we're supposed to believe, oh, yeah, they got it right this time. The most interesting thing to me that happened was about 5 minutes into Powell's press conference when he came right out and said, well, this isn't really a plan because no one can say for certain what's going to happen in, 6, 12 months from now. No kidding, really? When he said that, the dollar took a nosedive and the precious metals rallied. This is a really tenuous time, Elijah. Besides all the economic stuff and the vast majority of Americans getting just stretched to the point of breaking, you've got political stuff. We're all waiting on the Supreme Court stuff later this month, and pending midterm elections, and food crises. So, the markets do what the markets do. I would suspect the stock market's got further to fall. I've been writing about that publicly for the last couple of months. We're getting close to my first target, which was the 200-week moving average for the S&P. When I first started talking about that, the S&P was about 4,400. That thing's down at 3,500, and we're only about 150 points away now. And there's a chance we could go quite further than that. At some point, then that'll force the Fed's hand, and then that's when it's going to be a boom again for you and me and everybody in the precious metals. But for now, it's just really ugly, and it's like I said, not just in the markets, but societally, And I really feel for the people that all this Fed stuff and what they've done to us over the last 13 years are now really having a negative impact. We can always cherry pick dates, right? I mean, the Bitcoin people and the people that hate gold always cherry pick dates to try to make gold look as bad as possible. But I can do that too. And in this case, let's just look at year to date. Right now, as we speak, gold's up 1% year to date. Now, if you had told me, given the predominance of machine trading, algorithm trading, and gold futures, and how they're keyed to, play off of the level of interest rates and real interest rates and the dollar. If you had told me back on the 1st of January, when gold opened at 1829, if you told me back then, that the 10-year note would have moved from 1.25% to 3.5% a couple of days ago, that the dollar would have gone from 95 to 105, and yet gold would still be up 1%. I'm not sure I believed you, right? And so I think there's a factor, kind of a strong hands, as they call it, Elijah, in that, I mean, look, if I can figure this out, there are a lot of people smarter than me that obviously can figure this out too. I mean, we know where this is going to go. The Fed has played these rhetorical games on 3 or 4 occasions now since they started QE in 2009, and every single time they end up having to get back in because at the end of the day, they're the bid of last resort in treasuries and mortgage-backed securities and the rest. And you wonder why these QE programs keep getting bigger with each successive one, because every time they step back, they fall behind the curve. And they got to provide even more new cash to try to catch back up. So that's what's coming. And I think that's why gold, silver's down, whatever it is, 5-6% year to date. It might be more than that. But nonetheless, I think that's what the precious metals are sensing, is that point is coming. And when that point comes, it may come a lot quicker than people think. And so we might as well just hold on at this point. And that's why they're hanging in there. And Powell has talked about that. He himself has said that in the past, 6-9 months, that they've got to get above zero, move up from where they had it all through COVID at zero, so that they can turn around and have some room to cut again. Because really, they don't have any other tools besides, moving the Fed funds rate around and QE, and maybe constructing other facilities that allows them, to repo cash or reverse repo, cash, or, all the other lending things that they do. So they're very limited in what they can do, these masters of the universe. And so, yeah, that's part of it. But think about the cruelty of that. I mean, we're at this point in time. I mean, Elijah, the median U.S. income is $44,000. That's it. So think of your median couple in the U.S. pulling in 88. Hopefully if they own a house, hopefully they refinance, but they're not going to go buy a new house at 6% mortgages now. I mean, that's out, and then rent costs are the highest they've ever been. We don't have to get into gasoline and food and everything else. And, the Fed likes to talk, oh, yes, we look at the JOLTS job openings. There's all kinds of work for people. Really? Where we're going to find out, because all of this margin pressure that employers are feeling, they got to do things. They got to start cutting costs. You're going to start seeing layoffs, right? You're going to start seeing the unemployment rate go up. And what do 50, 75 basis points do about refinery supply and gasoline prices and diesel prices and all that kind of stuff? Nothing. And so just so the Fed can have wiggle room to cut again, they're just absolutely crushing, 70, 80% of the U.S. population? It's just brutal. It's just, I mean, I hope more people figure this out, can see who the true culprits are, the true cause of the problem this time, because every time we go through this cycle, things get worse for average, everyday people.